What if the thing you've been told is just an expense is actually how the wealthy build generational wealth? Most people pay for insurance and never think about it again. But the rich treat it like a weapon. And once you see how, you'll never look at insurance the same way. Every month, millions of people write checks for insurance they hope they never use. They see it as protection, a safety net for the worst days of their lives. But somewhere in a boardroom, a wealthy investor is doing something completely different with that same product. He's using it to grow money tax-free, pass wealth to his children, and even borrow against it all at the same time. This isn't a secret society. It's not insider trading. It's a system fully legal, widely used by the ultra-wealthy and almost completely ignored by everyone else. By the end of this video, you're going to understand exactly how it works. Part 1. The Mindset Shift. Here's the first thing you need to understand. The rich don't see insurance as a cost, they see it as a financial tool. That shift in thinking changes everything. When you see insurance as a cost, you look for the cheapest plan. When you see it as a tool, you start asking a very different question: how can this make me money? And here's the part most people don't realize. Certain types of insurance policies actually accumulate cash value over time, not just coverage, real usable money sitting inside your policy. The wealthy figured this out decades ago, and they've been quietly using it ever since. Part 2. Cash Value Life Insurance. Let's talk about the most powerful tool in this system: permanent life insurance. Most people are familiar with term life insurance. You pay, you're covered. It expires, end of story. But permanent life insurance is a completely different animal. Policies like Whole Life or Indexed Universal Life build what's called a cash value component. Every premium you pay, a portion goes toward your death benefit, and a portion grows inside the policy like a savings account. But here's where it gets interesting. That cash value grows tax-deferred. The government doesn't touch it while it's growing. And the wealthy don't just let it sit there. They borrow against it. Part 3. The infinite banking concept. This is where things go wild, and where most financial advisors stop talking. The strategy is called infinite banking, and it's exactly what it sounds like. You become your own bank. Here's how it works. You fund a whole life policy, aggressively putting in as much money as legally allowed. The cash value inside grows steadily, backed by the insurance company. Then, when you need capital for a business, a car, an investment, you don't go to a bank. You borrow from your own policy. Now, this might sound small, but it changes everything. When you borrow from a bank, you pay them interest. When you borrow from your own policy, you pay interest back to yourself, and your cash value keeps growing in the background as if you never touched it. The rich use this cycle over and over. They invest, they repay, they reinvest. It's a compounding loop, and they're the bank in the middle of it. Part 4. Tax advantages the wealthy love. Let's talk about taxes, because this is where the real edge lives. The IRS has rules, lots of them, but life insurance has a special place in the tax code that most people walk right past. First, the cash value inside your policy grows completely tax-deferred. Second, when you take loans against your policy, those loans are not considered income. That means no tax bill. Third, when the death benefit is paid out to your heirs, it passes income tax-free. Think about that for a second. You grow wealth. You access it without being taxed. And you pass it on without your family writing a check to the government. This is why high-income earners and business owners pour millions into these structures. It's not avoidance, it's strategy. And it's hiding in plain sight. Part 5. Life insurance as a business tool. Here's something that will surprise most people. Corporations take out life insurance on their key employees and sometimes even their executives. It's called COLI, corporate-owned life insurance. The company pays the premiums. The company is the beneficiary. And the company uses the cash value as a tax-advantaged asset on their balance sheet. But this is where things go wrong for the average person. They assume these strategies are only for billionaires or massive corporations. They're not. Small business owners use these exact structures to fund retirement, protect their business, and reduce their tax exposure, all inside a single policy. Part 6. The annuity angle. Now let's shift gears slightly, because Insurance for the wealthy isn't just about life policies. Annuities are another tool the rich use to create guaranteed, tax-deferred income streams. Here's the basic idea. You put a lump sum into an annuity. It grows either at a fixed rate or tied to a market index. And later, you can convert it into a stream of income you literally cannot outlive. The wealthy use annuities to protect a portion of their wealth from market crashes. While their riskier investments swing up and down, the annuity sits quietly growing, stable, guaranteed. It's the foundation beneath the house. And here's the part most people miss. Inside certain annuities, your gains are locked in annually. Market goes up, you capture the gain. Market crashes, you lose nothing. The wealthy don't gamble with everything. They structure safety beneath every risk they take. Part 7. Passing wealth to the next generation. This is the final piece, and honestly, the most powerful one. The ultra-wealthy don't just use insurance to grow money. They use it to transfer wealth across generations in the most tax-efficient way legally possible. An irrevocable life insurance trust, or ILIT, is a structure where a trust owns the life insurance policy. The death benefit passes to heirs completely outside of the taxable estate. That means no estate tax. For families with large estates, this can save millions. Not thousands, millions. And the beauty of it? The government wrote the rules. The wealthy just actually read them. So let's bring it all together. The rich aren't just buying insurance, they're engineering financial systems inside of it. They use permanent life insurance to build tax-free cash value. They borrow against it to invest and repay themselves. They use corporate policies to protect businesses and reduce taxes. They use annuities to lock in gains and guarantee income. And they use life insurance trusts to pass fortunes to their children tax-free. None of this is magic. None of this is exclusive to billionaires. It is, however, exclusive to people who know it exists. Now you do. The question is, what will you do with that information? If this video opened your eyes, hit subscribe because we're just getting started.